What's up, guys, and welcome back to another episode of the Team Member Perspective podcast show. I'm Colter, your host, former top producing team member of 6 years. I figured out how to sell life and health at a high level consistently, and now I'm teaching team members on how they too can do the same. And, I just think about my story a lot and think about where I was at mentally when I first started as a team member and where I got to be mentally. And when I first started, guys, it was tough. I kind of got into the role and got into insurance with this mindset that, hey, I'm going to crush it. I'm going to do really well. I'm going to sell a lot. And that eventually started to happen. But initially, my first 2 years, it wasn't happening. And I was pretty frustrated with that, especially because I was a door-to-door salesman for a couple years and I did really well there. And I learned how to sell in an opportunity where it was like I wasn't given leads. I had to create my own leads, 100% commission. I wasn't guaranteed a paycheck. And so having some experience and success in door-to-door sales, when I got into insurance, that's why my mindset was that way, right? I had proven to myself that I can sell and that I don't need leads to sell. And then I can take someone that's not interested in a security system and sell them a security system by just simply knocking on their door. So it built a lot of confidence for myself, right? I developed a lot of self-confidence in learning how to sell. And so when I get into insurance, I had this expectation that, hey, if I can do the door-to-door stuff, I can do this stuff. And P&C, no question, it was easy for me to pick that up and start closing policies right away. But life insurance wasn't the same. Life insurance was difficult. And, my first 2 years, I sold maybe 10 life apps a year. And it was frustrating because the amount of work and the amount of times I was pivoting and trying to sell life insurance was not adding up to the amount of policies I was selling. There was a lot of disconnects. And it was frustrating, right? I was discouraged. I was, quite frankly, a little pissed off. Why can't I figure this thing out? And at the end of the day, I had a lot of limiting beliefs that I was working through, right? I believed that people were only going to buy the auto and home insurance from me. And that if they were going to buy life insurance from me, it was meant to be, and that they were actively looking for it. I believed that customers had enough coverage through work, and that objection, I have it through work, that carried a lot of weight for me. And I almost convinced myself that they don't need it because they have it through work. I convinced myself that people didn't need life insurance. And I had this limiting belief as well that if I were to somehow get a customer to be willing to submit an application and for me to actually sell the policy, that I would run into a lot of headaches with underwriting, that it would be like babysitting them, and that why would I put all this effort into writing policies when they're not going to complete the underwriting and they're just going to go incomplete, right? I operated through a lot of these limiting beliefs. At the end of the day, the customer had basically sold Colter on why they didn't need life insurance instead of Colter trying to sell them on why they did. And, I'm frustrated. Going into my third year though, things changed for me. I ended up doing 123 life apps, which was really cool. And then, every year after that, I did over 200. I also got to a place where I was doing premium at a high level. But for those of you team members listening to this, if you're not selling 100 life apps a year, figure that out first. Stop worrying about the premium. Figure out how to sell 100 life apps a year. And some of you might be thinking well, Colter, how in the heck am I supposed to do that? I'm literally writing 25 a year. How am I supposed to go from 25 to 100? I don't think that's possible. It absolutely is possible. If you think about how many life apps it would take for you to write 100 a year, how many life apps it would take per week to do that, all of a sudden this big goal of this 100 life apps a year seems actually really doable, right? It's 2 life apps a week, right? If you can't get 2 life apps a week, you're not having enough conversations, truthfully. And maybe if you're I'm having a lot of conversations, but it's not working kind of like it was for me, I would say reach out to people that are having success, because it's not that you can't have the success, because it's happening all around us, right? I did it consistently for 4 years. I've got top producing team member coaches that are consistently doing it year after year. So it's not that it's impossible, because people, team members, just like you, just like your team, they're doing it, right? And so get around them, pick their brains, figure out what are they doing a little bit differently than what I'm doing. And I'm telling you, you too can get there, okay? But if you're not selling 100 life apps a year, start there. Don't worry about the premium. The premium will follow. And for me, it took learning how to sell apps that allow me to be prepared to get after the premium. And so today, guys, I want to talk about a strategy that I implemented as a team member that helped me write a lot of life insurance, helped me get into more, conversations and actually selling more apps. Okay. Now here's the cool thing. And some of you might be thinking Colter, what are you talking about? We get paid based on the premium that we're doing. I know you do, but you've got to learn how to sell life insurance in general to be able to get after the premium. And here's the thing is think of it this way: of each life insurance application that you submit and that you issue is another opportunity for you to get more life insurance, get more premium. And that's what we talk about and we train on in our group, is the life insurance funnel, right? Solve one immediate need with a life policy. Maybe it's paying off a loan on a car, covering a mortgage or part of the mortgage, paying for a funeral, and keep it simple. Take the complexity out of the conversation. Stop trying to do too much. Go for one immediate need, knowing that, hey, once this policy issues, I'm going to get in front of the customer again and then go for more. I'm going to get in front of the customer again when they don't have an agenda. They're not just calling to get their car added and try to get Colter off the phone. They're not just calling to pay a bill, but like this review is, they don't have an agenda. They're doing the review because Colter told us to do the review and Colter told us to come and pick up this policy. And so they don't have an agenda. And when you can meet with them on the back end, you'll find that their mental capacity is there and they can actually get into reflection mode with you rather than just be in task mode. Okay. But today, guys, I want to talk about mortgage protection. This is a play that I feel like helped me write a lot of life insurance, and I know it can help you too. Okay. So mortgage protection, what is it? Well, guys, it's really simple. It's just a way of positioning life insurance. We are positioning life insurance to pay off the mortgage. Okay. Now I want you to think about this. Sometimes we get streamlined in our thinking and think that in order for us to do this mortgage protection play, in order for mortgage protection to really work, we've got to have enough death benefit to pay off the entire mortgage. Okay. I think we should be leading with that. Yes, but I don't think that's the only way we can sell life insurance to pay for a mortgage. I think we can also sell it to maybe cover half of the mortgage, right? Like if we get resistance and pushback and objections and it's like the customer, like we feel like the conversation's done and the customer's like, they're not going to do it because they don't want more, to pay more, and that whatever it is, why not offer them covering half of the mortgage? Why not, if they even decline covering half of the mortgage, why not position life insurance to come in and just make monthly mortgage payments for a couple of years? Like who's to say that like if you try to go for the full mortgage and they decline you, and you try to go for half and they decline you there, who's to say you can't then position like $100,000 starter policy to just pay for monthly mortgage payments? Okay. And so my first message is to just get a little bit more creative with how you're positioning life insurance, right? Today, we're going to talk about how to position it to pay off a mortgage, but like don't get streamlined in your thinking that if you don't cover the full mortgage, you've lost it, because you can position it to cover half or cover monthly mortgage payments too. Okay. So in talking about life insurance to pay off a mortgage, let's talk about the different times that we can have this conversation with our customers and which of these times is the most optimal. Okay. And so if we think about this, the most optimal time to talk to people about getting a life insurance coverage to pay off their mortgage is when they purchase the house, right? Like on these phone calls that you guys are getting from customers that just purchased a home, that is the most optimal time to talk to them about getting life insurance to pay the mortgage off. Let's talk about why. Well, when people buy a home, right? Like think about this. If you've purchased a home before, I want you to go back in your mind with me to when you did that. And leading up to that decision, like it's a big decision, right? Buying a home is one of life's biggest financial commitments. And so with that being said, there's a mix of pride. Like people are like, oh my gosh, like I'm finally doing it. Like I'm at a place where I can buy my own home. Like that is a milestone for people. They're feeling prideful. They're feeling good about it, right? But alongside of that, they're a little stressed. They're a little stressed about this because now it's like, it's a huge financial commitment, right? And, they're also excited too, right? So they've got this mix of pride, excitement, and stress. They're thinking about their home. They're thinking about the risks more than they ever will when they first purchase it. So the most optimal time to talk to people about life insurance to pay off their mortgage is when they purchase the home initially. Okay. And so that's on the initial phone call to your office when they say, hey, I just bought a new home. Can I get a quote? Right? Hey, we just moved and we bought a new home. I need to get my homeowner's policy added. Right? And so the mortgage is on the mind. The house is on the mind. Okay. And if you think about like the process to get a home, if people get a mortgage on the home, outside of all of the big decisions of deciding if they're building a home, what, layout to choose, what finishes to choose, what cabinets, countertops. Like there's a lot of decisions that have to be made there. Or even if someone's buying a home, there's other big decisions that have to be made. But alongside of that, it's like they're having to talk with the mortgage company, the lender. They're having to get them their tax returns, bank statements. And, they're really talking about the numbers, and they're talking about this mortgage amount that they're going to be financing, this debt that they're going to be taking on. They're talking about this monthly payment. And, with that, there's stress, right? Yeah, they're excited. They're prideful. They're ready to get in their home. But there's also this element of stress that makes this the most optimal time to talk to people about life insurance. Okay. The mortgage is top of mind. It's emotional for them. It's so new. It's so fresh that it's such a good time to do it. Now, because this is like one of the largest debts that most people take on, and, if it's their first time buying a home, or even if they've bought a home, there's feelings of vulnerability here. Okay. Like people feel a little bit vulnerable, and they start to go in their mind and start thinking about am I going to be able to keep paying these monthly mortgage payments? Like, well, what happens if I lost my job? Like they start going down and playing out these possible hypothetical scenarios. And a lot of times, because it's such a big commitment, they're going towards the negative scenarios that could happen. Well, what if I get to a place where I can't afford this mortgage anymore? What would we do then? And a lot of times, I'm not saying this happens all the time, but some people will even think what happens if I lose my job? Or what if I get hurt or something and sick and I'm out of work for a while? Like, how do we pay the mortgage payments then? Like, what happens if I die, right? Like, what happens to the mortgage then? Now, I'm not saying that they're actively thinking about that, like if they die, but I'm saying is that they're thinking about these hypothetical scenarios that could happen that's bringing a lot of stress for them in the present moment as they're getting their home and as they're finishing up their mortgage, right? It's just a high emotional time when the mortgage is going to be top of mind, okay? And so what happens, guys, is this creates this natural buying window. Okay, where life insurance makes a lot of sense for them because of all of these things that they're thinking about. The pain and the risk, like it's fresh. Like they're thinking about those things. They're already thinking about the long-term security. They want to keep this home long-term, and their mind's going there. And guys, they really have this deep desire to protect this investment, because that's how people view in this is like, this is a big investment. They want to protect the investment, right? Like you've probably heard that people are more motivated for, not losing something than gaining something. Like if they've got the house, the last thing they want to have happen is lose the house, right? And so it's just such a good time where they're already thinking, this is the conversation that's already happening in their minds, that all we really need to do is enter that conversation happening in their minds. Now, I know a lot of you are thinking like, well, people are streamlined in their thinking. They only want the homeowner's insurance from me. People don't have the time. They always stay surface level with me when I try to get into life insurance. And so a lot of you choose not to talk to people about life insurance when they call in to add their homes, right? But my message is like, just take action, talk to them about it, because this is the best and most optimal time that you can bring up life insurance to pay off a mortgage that's going to carry the most weight for them. You've got a lot going on your side when people are calling in initially when they just purchased the house, right? Because that's where their mind's at. And the cool thing is like, you don't have to manufacture and create urgency. Like the urgency is already there because of everything going on in their mind. So the key takeaway here is that the best time, the most optimal time for you to talk to customers, your customers that have a homeowner's policy or getting a homeowner's policy, is when they call in initially because they just purchased a new home. That is the best time to talk to them about life insurance to protect their mortgage. Okay. Now, that's not the only time that we can talk to people about getting life insurance to pay off their mortgage. And if you're like me, you're thinking like, how many phone calls do I get, on average, maybe per day, per week, per month, where people are just purchasing a new home and they're getting a quote from me, right? Like it doesn't happen as much as I'd like it to happen. Like imagine if you literally could show up to work and you get like 5 or 10 phone calls per day of people that are wanting homeowners insurance. Like that for me is like the ideal world. Okay. Like I would have so much opportunity there to talk to people about life insurance. I would sell a boatload of life insurance just because of the nature of this transaction, right? The urgency's there. They're emotional. Homeowners insurance, mortgage, the risks, it's all top of mind because it's so fresh. Okay. So an ideal world, I would like 5 to 10 people per day to talk to that have just purchased a home that I could talk to them about life insurance to pay off their mortgage. But that for me wasn't the case as a team member. But I knew that there was a lot of power in positioning life insurance insurance to pay off a mortgage. And so I remember, as a team member, I always wanted to be proactive. I always wanted to play offense. And so what I was always doing was I was always working the book. I was always creating lists for myself that I could call outbound instead of waiting around for new business quotes, instead of waiting around for people calling in to add their home and get a homeowner's policy because they just purchased a new home. Instead of waiting around, I wanted to take action. I wanted to be playing offense and call people because I felt like I was in control of my production at that point, right? I was in control of how many life insurance policies I wrote because I had a way where I could call people instead of waiting for them to call me, right? I was proactive, and I always wanted to be proactive because, again, it was my way of being in control of my production. And so mortgage protection is something that we can run, and it's a way we can position life insurance with current customers on our books of business that have a homeowner's policy that has a mortgage, okay? Like, run a list of all of the homeowners policies that you have on your book of business that have a mortgage and start calling these people. Okay. For the rest of this episode, I'm going to talk about the nuances of that specific phone call because there are nuances. Okay. It's a different dynamic, right? For people that just purchased a new home versus people that have had the home for a while. Okay. And so understanding this dynamic will help you be compelling when you do decide to start calling these people. So a couple of things about this is you're going to have people that have had their homeowner's policy for 6 months. You're going to have people that have had it for a year, 5 years, 20 years, right? You're going to have a range of these different customers that have had their mortgage for different periods of time. But the principle here is it is a different dynamic, okay? What happens is the mortgage and the mortgage payments and the debt, it all becomes normalized over time. It just becomes part of what you do. It's just, I have my mortgage. I'm paying for my mortgage. And so it's not as fresh. It's become normalized over time. They've been making payments for years, right? Like, it's not something that's new and they're going to be hit with their first mortgage payment. Like, they've been making these payments for years. And so this emotional urgency, it's kind of dulled a little bit. Like, it's not as prominent. It's not as prominent as it was when they first bought the home. Okay. So it's normalized. They're not thinking about the mortgage and the risks and the exposures like they once were. They're not actively thinking about, like, what if something happened to me? Okay. So that is the difference. That is the nuance there. Okay. Now, the additional challenge that we face when calling outbound to our current customers is that these people aren't expecting our phone call. We're literally interrupting their day. Okay. And the challenge with that is, like, we don't know what type of state the customer is going to be in when they answer the phone. They could be distracted. They could be guarded. They could be skeptical. They could be thinking, like, okay, like, why is my insurance agent calling me? They could be thinking everything's fine. Okay. And so we don't really know what state the customer is going to be in when they pick up the phone. That's a challenge. And because of that, it's very easy for these customers, when you do call them, it's easy for them to just brush you off. It's easy for them to just give you surface level responses when you ask questions because they're naturally in this distracted, guarded, skeptical state, right? And so, like, don't be surprised, and you're probably thinking, like, yeah, I've tried to call on lists before, but I always get people that are just so surface level. They say, yeah, I'm good. I'm fine. Thanks for the information, but everything's fine. Okay. And so there's some challenges with calling on this list. Okay. And so because of these nuances, there's a few things that are crucial, that are very important to allow these lists to start working for us, right? Because it's not a matter of, do these lists work? Does it work to call on lists? It's how well can you make them work, right? Because I'm telling you, I had a lot of success with what I'm about to teach you. I've had team members, that I've been able to rub shoulders with that have had a lot of success with what I'm about to teach you. So it's not a question of, will this work? It's a question of, how well can you make it work? Okay. Now, to be compelling with this, I want to talk about a few things that matter and matter tremendously. And the first thing is your opening, right? If you have a poor opening, you're going to have the same story of people being surface level with you, telling you they're good, brushing you off, and just trying to get you off the phone. And you're going to stay stuck in this mindset that this just doesn't work because your opening sucks, right? If your opening sucks and if your opening is poor, don't expect to close any life insurance. Because if you can't open a conversation in a way where the customer is actually open to your recommendations, in a way that doesn't cause your customers to immediately put their guard up because they feel like they're being sold to, if you can't open a conversation, don't be surprised when you can't close policies. You've got to be able to open a conversation to close policies. Okay. And I'm going to give you a few tips as to how to make your opening good and how to have an opening that causes your customers to lean in rather than push you away and try to get you off the phone. Okay. And really at the end of the day, guys, like don't overcomplicate it, right? Your opening, it needs to sound personal. It needs to sound conversational. Okay. It needs to get to the point, and I think it needs to be service driven. Okay. And so you've got to be able to open the conversation for you to close anything. Okay. And, so in talking about that opening, if I put myself in the customer's shoes and you were to call me, I want a few questions answered for me to be able to decide if I'm going to engage or decide if I'm not going to engage. For me to decide if I feel like I'm being sold to, or if I feel like something's off, or if I feel like it's like a valid phone call. Okay. Because here's the deal. Like these are your customers. Okay. So it's not like they don't trust you, because they do to a degree. Like they trust you and your agency to a degree because they have their policies with you. But like people aren't dumb, right? They're going to pick up, like if they feel like they're being sold to, they're going to pick that up very quickly. And the sad truth is that most team members trigger that resistance in their opening. And so you think about it, if you call me and in your opening, you're basically triggering this resistance. Okay. And I feel like you're being sold to. I feel like the reason for your call is not actually the reason for your call, but the reason for your call is actually to sell me something. My guard will be up. And that's where my brain decides to check out. That's where I decide the next thing I'm going to do is try to get you off the phone. Like no matter what you're saying, I'm actually not listening because I feel like I'm being sold to, right? So no matter what you have to say in your presentation, it doesn't really matter because I'm not listening to you. That's what happens when our openings suck and when we trigger sales resistance in our opening. When it feels just like a sales call, your customers aren't going to lean in. They're actually going to try to just get you off the phone. Okay. And again, you might be thinking like, I need to get better at selling the value of this thing. When in all reality, it's like you need to get a better opening because your opening is your bottleneck. Okay. So your opening, like you need to be able to answer a couple of questions in the customer's minds when you call. Number one, who you are. And number two, why you're calling. Okay. And if you can do that, like you'll have better openings. Okay. And so outside of that though, like that's not it. I can't just, customer, this is Colter with XYZ agency. I'm calling because I need to kind of be a little bit more strategic as to what I'm saying I'm calling about. Now, because these people have policies with you, don't lead with, I'm calling to talk to you about your mortgage, getting life insurance to pay off your mortgage. Like that's not going to work for you. You haven't earned the right to talk about life insurance yet. And so I would almost think about, with your opening, lead with service, lead with confirming things, like give your customers a good reason as to why you're calling that aligns with some sort of service or some sort of confirming information. But again, I always like to think about how can I earn the right to actually call this person? And so what I like to do is I like to use renewals. Okay. So if the homeowner's policy is coming up on renewal, or if the homeowner's policy just renewed, or even if it renewed 6 months ago, I might use that in my opening. Okay. And so putting that all together, I need to give them who I am, why I'm calling fairly quickly, and I need to do it in a way that creates some curiosity. I don't want to lay out all of my cards and let them know that I'm calling because you have a mortgage and I need to talk to you about life insurance to pay off this mortgage. I haven't gotten there yet. That will trigger resistance if I get there too soon, right? I want to earn the right to get there, and the way that I do that is with confirming some information and kind of leading with service, leading with a review. Now, some of you are calling these people and you're saying, I was calling to review your policies. It's been a while. Stop doing that. You're not just calling to review policies. Customers know that. They know that you have a different agenda. They know that you're trying to sell them. And so the whole, I'm just calling to review your policies, it's been a while. It's like, why would I care? Right? Like everything in my mind is good. And so if you lead like that, can you see how you're going to be triggering resistance right away? Could you see how your opening's not going to do what you want it to do, and you're not going to close policies because you're triggering that resistance? Like people know and can see right through that. So the whole, I'm calling to just review your policies, it just doesn't work anymore. And you guys probably know that. Okay. So instead, what I like to do is here's an opening that you can use with this list of calling people that have a homeowner's policy, have a mortgage. Okay. I want to feel like I've earned the right to call them. I want this to feel like a service, and I want to tell them my name and the reason for my call. Okay. And so this is what I'll say. I'll say, hey, Mr. Customer, it's Colter with XYZ agency. I'm calling on your homeowner's policy at 123 North Sarah Street. It looks like it just renewed. Do you have a couple minutes? Okay. So I'm going to repeat that one more time. Hey, Mr. Customer, it's Colter with XYZ agency. I'm calling on your homeowner's policy at 123 North Sarah Street. It looks like it just renewed. I've just got a couple questions. Do you have a couple minutes? Or I just need to confirm a few things. Do you have a couple minutes? Okay. So can you see how I'm telling them who I am, why I'm calling, but that reason why it's relevant to them, right? And the way it became relevant to them is because I said the address, 123 North Sarah Street. It's like, yep, that's my house. Yep, I do have a homeowner's policy with you. And oh, the policy just renewed or it's renewing. Yeah, I'll give you my time. Okay. And so that opening, I'm telling you, will help you have customers be more open to your recommendations with this rather than be closed off and try to just get you off the phone. So you've got to nail your opening for this thing to work. Now, the next thing is we've got to get the customer out of task thinking mode and out of reactive mode, and we want to get them into reflection mode. Okay, so if we come back here to this whiteboard, I've drawn this out for you guys. The customer, you've got to know that your customer, when you call them, they are going to be in task mode, okay? And I think more so with this list, they're going to be in reaction mode, okay? So they're going to be in reaction mode. They're not going to be in reflection mode. And what is reaction mode? Well, they're just going to react to what you're saying, and they're just going to probably give you surface level responses, right? They're not thinking about coverages. They're not thinking about risks. They're really not thinking about any of that because we've interrupted their day. So they're in reaction mode. They're in task mode, okay? What we want to do is we want to get them to reflection mode. We want to get them thinking about their risks and exposures a little bit differently. But as you can imagine, I can't just right away after my opening get right into reflection mode and start talking about coverage. I need to earn the right to get there, okay? And so there's some steps along the way that help us get them from reaction mode to reflection mode, okay? And a few things that I'll give you, and by the way, guys, like these podcasts, like I try to give as much value as I can, but at the end of the day, this is like, we're staying fairly surface level here, right? Like I'm really kind of giving you like, bronze nuggets, right? Like the golden nuggets are going to be with our group, the team member perspective. That's where we get into the nuts and the bolts of the conversation and how to navigate these phone calls, okay? But here, we're staying fairly surface level. If you want more of like the nuts and bolts and exactly the how to do things and the what to say and that type of training, like click the link below. Let's get on a phone call, because that's what we do. And for me as a team member, what really moved the needle for me the most from going from 10 life apps a year to consistently over 200 was learning the what to say, learning the nuts and bolts of the conversation, the details, right? And that's what we do in our group, okay? But how do we get them from reaction mode, okay, to reflection mode, okay? So we've done our opening. Hopefully we've earned the right to talk to them a little bit and confirm some information. But now I want to get them to start thinking about their risks and their exposure a little bit more, because again, these people probably aren't, right? They've had their mortgage for 6 months, a year, 10 years, 20 years. And so the mortgage has been kind of more normalized. They're not actively thinking about like, well, what if I get sick or hurt? What if I die? Like what happens to the mortgage payments then? It's become normalized, okay? And so we need to get them to kind of into that reflection mode. We need to kind of help them go there and think about those risks before any sort of recommendation is going to carry weight, okay? So how do we do that? Well, we can't just jump right into asking them questions about coverage and asking them, hey, what happens to the house if you die? Like it's too soon, okay? And especially because in our opening, we said, hey, your homeowner's policy is renewing. I just need to confirm a few things. So first and foremost, to bridge from reaction mode to reflection mode, we need to first confirm some information on the mortgage policy or on the homeowner's policy. Okay. And so what we want to confirm is like maybe confirm some policy details, maybe confirm named insureds on the policy, maybe confirm mailing address, right? And then maybe get into confirming some coverage, right? Because the homeowner's policy renewed or it's going to be renewing, I need to make sure all this information is correct, right? You're paying for this. I need to make sure that if something happens, we've got the right coverage in place, right? So I like to start with general confirming of basic information, names on the policies, mailing address, things like that. And then I want to kind of start to transition to talk more about coverage. Okay. This is when I'm going to start reviewing the coverage on the homeowner's policy itself, the dwelling coverage. I'll go through personal property coverage, liability coverage, some of the endorsements. Okay. But now my end goal, guys, is I want to talk to the customer about getting life insurance to pay off their mortgage. Like that's where I want to go, but I can't just jump there right away. That's why I got to confirm some information and kind of ease into this. Now, in order for me to earn the right to talk to, John about life insurance to pay off his mortgage is if he dies, I've got to start talking about the mortgage first, okay? So after I confirm some personal information, after I've reviewed the coverage for a minute, now what I'm going to do is I'm going to confirm the mortgagee on the policy. Okay. I'm going to confirm the mortgagee on the policy, and then I'm going to find out how much they have left on the mortgage, what their monthly payments are, and that information. So then I can then have the information that I need to make them an offer to get life insurance to pay off the mortgage. Okay. But I'm also got to start talking about the mortgage, because if I am talking about the mortgage and they've told me how much they owe, I then have earned the right to talk to them about the exposure that they faced by not having life insurance to pay this thing off. Okay. But so after I've gotten and I'm talking about the mortgage, I've confirmed that information. Now I'm kind of ready to talk to them about life insurance to pay the mortgage off. But what I don't want to do is I don't want to skip the problem awareness, right? I don't want to skip that. I've got to help John understand and see the risks that he faces. I've got to help him play it out in his mind and really think about if something happened to him, what that would look like for his family. I've got to bring awareness to this problem, awareness to this exposure before I even talk about a recommendation to cover it. Okay. Now, far too many of team members are skipping this piece and they're wondering, why is this not working for me? Well, think about it, right? If your customer had the mortgage for 5 years, okay, the mortgage has become normalized. They're not thinking about if they die, what happens to the house. They're not there. So if you skip that, and if you don't bring that awareness back to this problem, to this exposure, and help John really see, like, if you die, John, the mortgage is going to go to Cindy, and Cindy's not working. So Cindy's going to probably have to get another job or a job in general. And then who's going to watch the kids, John, right? We've got to bring awareness to the problem for the solution to carry weight, for our recommendation to carry weight. Okay. But far too many of team members are just jumping right into the recommendation, right? Hey, where you got a mortgage, I'm going to look at a coverage that'll pay that. Like, we haven't brought awareness to the problem. And let me ask you this, if you don't feel like you have a problem, or if you don't understand the severity of that problem, how much weight does Colter's recommendation carry to solve this problem that you don't think you have? Okay, I think you're following me here. So after I've talked about the mortgage, I now need to get into problem awareness. I need to help John see the real risk, see the exposure. Okay, now after I do that, after I've brought more awareness to the problem and asked the right questions, what will happen is there's this natural demand that John now wants the solution. He wants his mortgage paid off. Okay, that's when we can make a recommendation. Okay, and when we make that recommendation, what we'll want to do is we want to move this thing forward. Our end goal isn't to sell a policy and get a policy on the books. Our end goal is to submit an application, because both you and I know that life insurance isn't something that's guaranteed for everybody. It's something that you have to qualify for. And so why is our end goal to sell a policy when we don't know for sure if that policy if they can qualify for it? Okay. Now, here's one thing that you're going to like that, if your end goal is to help them submit an application, we can use what's called a pullback in sales. Okay. A pullback is really effective only after you've done a good job at bringing awareness to the problem, and only after that you've made a recommendation with value behind it, right? The pullback's not going to work that well if you haven't first done a good job at getting to bring awareness to the problem, this gap, the exposure that John faces by not having anything in place to pay off his mortgage. Okay. Not until you've made a recommendation and shown John exactly what we can do to solve that, your pullback's not going to carry as much weight. But if you do a good job at that and you utilize this pullback, it's going to do wonders for you. Okay. And the pullback is this, John. So you probably knew this, but life insurance is something you have to qualify for. And so I'm not even sure that we can even do this for you, because you do have to qualify. Okay. Think about that. Like, I just teed everything up. I've helped John see the big problem, and it's created some urgency. He's thinking about in his mind, Cindy would have to pick that up. She'd have to get a job. Awareness has been brought to the problem, which now John's like, I want the solution. I want the solution. So my recommendation carries weight. And so John's like ready to buy now. Okay. But now I do a pullback and I say, hey, I'm not even sure that this is something we can do, because I'm sure you knew, but life insurance, you have to qualify for it. Okay. And so now just think about how that pullback will naturally transition into you moving this thing forward and helping John start an application, right? Your end goal should be to submit an application. Okay. Now, outside of that pullback, to keep this thing moving forward and to create some curiosity to submit an application, another thing that you can do is to quote them your standard rate and your very best rate, okay? And so that could be like, hey, John, if we did this, it looks like it would come back at about $100 a month for our standard rate, but it could be as low as about $65 a month for our very best rate. And if you just say that to people, if you tell them what the standard rate is and what the very best rate is, and you just be quiet, you're going to see your customers be like, well, how do I get the $65 a month one, right? It creates this natural curiosity to then easily move and transition to the next step, which is submit an application, okay? So guys, this mortgage protection list, it is slept on. And I think it's slept on because we haven't really been taught how to navigate this. We haven't been taught that, hey, if you're not able to open a conversation, good luck closing it, right? We haven't really been taught that, hey, your customers aren't thinking about these risks. And so you've got to help them think about the risks before the recommendation, the solution carries weight, right? And a lot of us haven't been taught about how to actually move this thing forward and use a pullback and use quoting the standard and best rates to create curiosity to move this thing forward. Like, we haven't been taught that. And so now we've tried to work this list and we haven't had success. Now we believe that it's not something that will work for us. Guys, I got to end here. I got to say, look, it's not that this mortgage protection approach of positioning life insurance doesn't work. It's not a question of, will this work for me? It's more of a question of, how well can I get this to work for me, right? And if you're interested and you're like, you know what, this has been super helpful. I want to figure out how I can be more compelling in my conversations, how I can work the book more effectively so that I can start actually selling more policies, making more money, helping protect people in a deeper way, hitting the goals so that our agency can travel. If you're like, I want to dive deeper, I want the nuts and bolts, click the link below, get on a phone call with me and I can talk to you about what we've got, right? Our whole goal is to help team members sell more life and health than ever before, and we're seeing it happen. We're seeing it happen from simple processes and plays just like this. And that's our goal, is to help you, help your agency get to that next level, maximize revenue. And you know that in order for all of that to happen, we've got to get good at selling life and health products. We've got to get good at doing that if we don't want to leave money on the table. So guys, would love to connect with you. We are in the middle of our Fall Life series. We train on processes just like this, outbound, how you can work the book. We train on, service calls coming in and how we can create opportunities from those. We train on how we can write more life and health with new business. We train on review appointments. We do it all because there's so much life insurance opportunity, so much health insurance opportunity that is untapped in your agency. Our goal is to help you capitalize on that and capitalize on it through your team members. Agents listening to this, you shouldn't be a glorified team member. You're a business owner. You know that. But it's really easy to get stuck in that rat race of, picking up the live production because the team hasn't figured it out. If you're done playing that game and if you're wanting to become more of a business owner and work on the business rather than finding yourself working in the business year after year, click the link below. We can help you. You guys rock. Go run this play. I'm telling you, it works if you work it the right